Hello, friends. If you like roller coasters, you are going to enjoy today's session. The reactions to the CPI report. The number came in at 8.2%. Now, last month it was 8.3%. That's overall CPI. And core CPI actually increased by a little bit more than that. Core CPI means what prices increased without food and energy. So why are the markets up? Right now, the Dow is up 640 points. The S&P is up 62 to be at 3639, and the NASDAQ is up 116 points. Bitcoin, which was at 18,150, is down 19,157. It's gone up 1,000 points the last 5 hours. And Ethereum is at 1,268. So what happened, what is happening, and how is that going to affect our trading? This morning, when I started watching the markets, and at 7:30 in the morning, the futures were up about 100 points. So that indicated that people thought that the number was not going to come in quite as hot as possible, the CPI number, that maybe it would come in, 8.1, maybe 8. So people were cautiously optimistic. But in a matter of minutes, the Dow futures jumped from being up 100 points to being up 330 points. What happened? Okay. England, the major bank of England came out and basically said that they were going to be looking at tweaking the tax cuts that Liz Truss, the prime minister, was going to do in England. Liz Truss had basically come in as the newly formed prime minister, and she had said, I'm going to cut taxes, I am going to cap energy spending, and that is how we're going to get our way out of this mess that we are in. At the same time, she wanted the Bank of England to lower interest rates. All of those three things together were a recipe for disaster. And the pound fell in relation to the dollar. And it was almost a one-to-one relationship, and that hadn't happened in 30 years. So today, the British government and the Bank of England kind of issued this statement that said, hey, the government is going to walk back some of what it really wants, some of its tax cuts. And that made the pound go up. If the pound goes up, the dollar comes down. So today, the dollar has been falling in value. If the dollar falls in value, that is very good for multinational US companies which rely on multinational earnings. That is why the stock market is up today, the US stock market, because the dollar is falling. Now, what happened to the price of Bitcoin? Okay, the futures, which after the CPI number was immediately announced at 8:30, the futures, which were up 330 points because of the news out of the Bank of England, immediately fell to negative 400 points, a 730-point swing straight down. Bitcoin, which had been hanging in there, 18,900, 19,000, 18,850, immediately dropped to 18,157. So immediately plummeted. Solana plummeted. Avalanche plummeted. All of crypto plummeted. Because the thought was the CPI number that came out, really, it points that inflation is not going to go down as fast as the Fed thought. So on November 2nd, barely 3 weeks from today, the Fed is likely 99% going to raise rates another 75 basis points. Another 75 basis points when 30-year mortgages are already at 7%. When housing prices are not falling as fast as the Fed wants it to fall, and when rents are increasing. So surely we have to go into a recession. And surely if we're going to go into a recession, the stock markets are going to go down. And that is in fact what happened for the first hour of trading. And then there was a massive overreaction and people began to think, well, 8.2 isn't quite as bad as 8.3 last month. And you know, this sign that the pound is doing better against the dollar, that's good too. So maybe the recession in Europe won't be as heavy and as deep as people think it is. And maybe, you know, the Fed will say in America, oh my gosh, after November 2nd, when we're going to definitely tighten interest rates another 75 basis points, maybe in December we'll only tighten at 50 basis points, and then we'll see. And that single thought of, oh my gosh, maybe it's not as bad as we thought we were. Maybe we were walking into the doctor's office expecting a diagnosis of you only have 6 months to live. And now maybe it's, well, you have 9 months to live. It's still not great. You have 3 more months. So prices are now going up. Now, this is very good for us because what it does is it establishes a floor called support and a ceiling for what Bitcoin is doing relative to what the economy is doing. Bitcoin sank to 18,150. So now, even during the worst of the news this morning, Bitcoin didn't sink down into the 17,000s like I wanted it to. I really wanted Bitcoin to sink into the 17,000s because the last time we bought Bitcoin, it was at 19,257, basically with the price that it is right now. So it didn't sink. And so now I am not sure we are going to get Bitcoin down to the June lows of 17,500. So now I am going to be much more likely to wait over the next 2 days and over the weekend and buy Bitcoin. Hopefully we'll get a red day tomorrow and hopefully get Bitcoin into the 18s. But we're probably going to have to buy Bitcoin at 18.5, 18.6, 18.8. Whereas this morning we could have picked it up at 18,157. But the markets are unpredictable. So that is what is happening. Overall, please keep this in mind. Overall, this number of 8.2 is not good news. It means that inflation is not falling as fast as the Fed wants it to fall. And with the jobs report we got last month, adding 268,000 jobs, it means that the economy is not slowing as fast as the Fed wants it to go. So it's going to have to keep on raising interest rates. That is not good. That is not good for the markets. And ultimately, it's not good for you and I as consumers. And if the dollar begins to fall right now, domestically, we have been beneficiaries. You and I have been beneficiaries of the strong US dollar. It's been very good for us. If the dollar begins to fall in value, that will further weaken the individual families' financial positions, especially heading into winter, and especially as it is unknown what is Russia going to do with its oil. Is Europe going to survive with the oil reserves that it currently has throughout the winter? Or are heating bills going to go sky high in Germany? Are they going to go sky high in England? And in the United States, crude oil prices are creeping back up. So if you're already paying more for your rent and your heating bills are going to go up as the winter comes, you're going to have less expendable income. And therefore, inflation is going to be a problem. So those are the things we are watching. But those are the major things. Overall, this is still not great news. And we're going to see what it's like in the coming days, but we are likely going to get into Bitcoin somewhere in the mid to high 18s. Does anybody have any questions? This was a short and sweet one, but it is a reflection of the kind of 24-hour news cycle that we're in and how fast markets are reacting to the news. I'm going to tell you, I'll finish up with one quick story. When I was at Goldman Sachs 1,000 years ago, back when we had propeller airplanes, I was on a business trip. And the person sitting next to me said, what do you do? And I said, oh, I work at this bank. And they said, okay, what are the things you're watching out for? And I said, oh, I really want to land at a certain time because the Federal Reserve is meeting and I want to read the minutes. This is back before the Federal Reserve even had a press conference to announce their findings. So they would just put the meetings out, the minutes out. And I said, I really need to see the minutes because, that's going to affect what we're doing at the bank. And they said, what's the Federal Reserve? What's the Federal Reserve? What? And I mentioned who the head of it was. They had no idea who it was. This was like an educated person. Today, if you were sit across the table, across an airplane seat from someone, they would absolutely know what the Fed's minutes are doing. And that is how the economic news has become part of this 24-hour news cycle. Everything is cycling really fast. All of these things we're paying way much more attention to them. The markets are paying much more attention to them than they ever have before. But there really is no need, unless you're trading like we are. For long-term investors, you still shouldn't care. For people like us, yes, we care because it's going to affect the markets on a weekly basis. But that is how things have changed. Now everyone knows about inflation. Now everyone knows the CPI reports and everyone is talking about what the Fed is doing and everyone has an opinion about it. Are they over tightening? Are they doing too many things too quickly? Why are they not pausing? Are they going to push us into a recession? And that is the cycle that we are in right now. And that is how the markets are reacting. Very red one day, very green the next day. So unless anybody has any questions, we will leave it there. And we will put out how we're going to be trading on our Telegram channels. Thank you so much.